Hi guys, this is Mia and you are on my channel Zero Trade. Today is another trading day and we've already had the morning session with the folks on our Telegram channel. We managed to close 5 profitable trades, which I think is a pretty good result to start the day. You can check out all the results and screenshots on our Telegram channel and you can find the link under this video. But now I want to do a little session and provide you with some educational content while opening a couple of trades. We have started this video with a capital of $8,500 and in order not to waste time, I suggest choosing a trading pair. My favorites have been performing quite well lately, so I'll go with the euro against the Canadian dollar. Let's jump right into the trading view and take a broader look at the situation. So guys, what do we see here? I can spot a minor uptrend, or rather a correction after downtrend. I also notice that the price is forming something like a triangle, and I would recommend to use Fibonacci levels in order to assess the potential direction. Our potential direction is downtrend. We see downward movement, and I guess that after analyzing the situation, we can wait for a downward movement towards the support line. Therefore, on the 3-minute time frame, I opened a short position from the current levels. And while our trade is in progress, let's talk about the emotional state of traders. Trading psychology. It deals with the mental and emotional state of traders. It's all about how your behavior and mindset influence your trading. It also affects your discipline and risk readiness. Your mindset plays a significant role in your long-term success in trading. Understanding your attitude towards trading can be just as important as owning your skills in the stock market. Let's take a look at 2 major emotions in trading. I guess it's greed and fear. The first one is greed, and I think it can make a trader hold onto a position for too long, trying to squeeze every last penny out of it. Greed can also drive traders to take risky and speculative positions. This often happens towards the end of bull markets when speculation runs rampant. The another one is fear. It is the opposite. It's the reason why people sell early to cut losses and avoid further risks. Fear is a common phenomenon in bear markets. It can irrationally drive some traders to exit the market. Never underestimate the power of market psychology. Fear can easily turn into panic. Guys, emotions play a significant role in your overall trade strategy. If you want to achieve success, you need to master them. Mastering trading psychology is an art made. Your emotions, your fears, your hopes and dreams will change over time. You gotta be able to adapt and we need time to align our mental and emotional skills that lead you to a big wins. If you find yourself scamming to careless trading, there is often a sort of emotion behind the decision. Figure out what went wrong and try to fix it. Guys, please write about your experience in our comments. Has it ever happened that fear or greed prevented you from trading? And now, let's see how our trade is going. I see a downward movement, as I said, and alright guys, the first trade ended up in the green, congrats. Also, I didn't see quite the movement I was hoping for. Yeah, guys, it's set, but nevertheless, it's in green. Let's switch back to the trading view in order to check out the current situation and make a decision. I didn't make any changes in the trading pair. And here is what we are looking at. Let's stretch out the chart to a shorter time frame, and here we can see the price tested a level. Well, guys, I still believe that based on these values we will head down once again. We'll eventually reach the support line from the current levels, and I'm setting the 3-minute time frame, again, and going for a short position. Let's do this. While our second trade is in progress, let's talk about psychology of the market. Is it important or not? As a trader, you gotta understand your emotions and mindset, mate. It helps you figure out when you are acting all irrational. Imagine losing $1. Well, it's not great, but you'll survive. Now imagine losing $50. It ain't ideal, but you'll manage. But picture losing thousands of dollars. That's likely to trigger panic, innit? And panic can make you act in ways you never expected. That's why you gotta understand the psychology of the market. If you don't, you might get caught up in the hype, noise, or panic. A successful trader learns to manage their emotions even when everyone else is losing it. How? Set your own trading rules and stick to them. Lay out your decisions in advance to eliminate emotions from the equation as much as possible. Here is what your rules should cover at the very least. Limits. Limits on how much you are willing to gain or lose. Prices at which you enter or exit a trade. Once you hit a specific profit or loss target, either take the money or cut your losses. And most importantly, know yourself. Do your research and study those charts. Arm yourself with the right tools and strategies to make more informed decisions. And stay flexible, mate. Experiment with new ideas like testing different stop-loss levels. Experiments are a big part of the learning process. Emotions that influence trading psychology, greed and fear, are the most common. These emotions can impact trading psychology. That holds true both at an individual level and for the whole group. When a group of traders gets greedy, it can lead to a buying frenzy. The market stays optimistic, but when fear kicks in, the trend can quickly turn bearish as panic. Selling sets in. Well, guys, here is what we see. The seller didn't want to give us the trade, and it ended up in the red. But I am a stubborn one, and I still expect a downward movement despite this situation. And yes, as I said, the seller didn't do this, and yes, it ended up in the red. But as I have already said, I am a stubborn, and I think it will be downward movement, guys. We'll set the trade price twice as high. Let's go with $600. And we'll keep the same time frame and open another short position, but for some reason I cannot do this. Probably it's my bad internet connection. There are two trades, guys. How nice. Looks like my internet got a bit glitchy. Anyway, we've got two trades open back to back. Just as I said, I'm stubborn and I believe these trades will play. The entry price is good, to be honest, and I'm also expecting a downward movement. So yeah, two trades it is. Let's make doubles profit, let's. And while our third plus third trade is in progress, let's talk about about two emotions, greed and fear. Greed is a strong motivator. What do you think? Without greed, you wouldn't have the guts to buy those stocks, especially penny stocks, right? Greed wakes you up in the morning and keeps you going, but sometimes it leads you to take on too much risks. The market doesn't bend to your will. Sometimes it quiets down right after a big win. You get bored and start getting anxious. Your greedy side has no outlet. So you take a trade you are not familiar with, hoping it will play off. Another emotion is fear. Fear, guys, is a tricky emotion. It kicks in when we want to change our habits. Fear of failure is quite common. We all want to succeed and we all want praise for our efforts. But it can put some pressure on our trading game. Fear of success can also have a big impact. You might fear losing friends if you overshadow them, and success can expose dealers and dishonest people. There are four fears of trading: pride, happiness, anger, and impatience. It's important to stay focused and give your trades time to play out. If you exit the game too early, you might miss out a big breakthrough you were hoping for. As you understand, it takes a lot of practice to balance fear and greed. Everyone wants to know how to master trading psychology. Guys, my tips can help you. Watch the video, subscribe to the channel, and share your thoughts, and together we'll create a great atmosphere for trading. Well, guys, congrats! We can see that the buyer didn't want to hand over our trades that easily, but nevertheless, our planned double overlap broke out. I thought the movement would be more impulsive, but it turned out to be a bit smaller. However, we managed to close two trades in profit. It's a good job. I want to say a big thank you for your attention and for taking the time to watch our channel. Head over to the comments, join our Telegram channel where we provide our signals. Take care, everyone. Yours truly, Mia. Bye bye.